Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, the market, yeah, oh God, it just went down again today. We're sort of, we're in this very bearish period. One bright light, though, one bright light was that we saw Apple move higher, and that's very good because they had great earnings. It did move higher, so maybe that's a little bit of a backstop, but in general, wow, it was not what we wanted to see there. Definitely, just not what we wanted to see. But we do have there is a way around this, and that's what I'm going to be talking about today. I'm going to talk about some of the bear trades. Oh, that was from yesterday. Here's from today. Basically, the stocks have faded. We're just it's just tough to trade it. That's why I'm diverting most of my stuff to bearish trades. So we are in a downward trend. We want to be mostly in cash. We are probably going to go lower. I know we did have sort of a little dead cat bounce yesterday, but I don't think that's going to hold. And so it may be going lower. By the way, if you're looking on TikTok, super easy to take a look at all the charts and everything. Just go to the profile and click on the link that is a link directly to the show on YouTube that we're broadcasting directly on YouTube, so you can see all of the charts. So basically, what's happening here? This is the thing. Apple stock basically beat on holiday sales. They did great. We got some stabilization there. I'm so glad that I closed my bear put spread right before. We did great on that, by the way. We retained almost 90% of what we got up front, which is $805. We retained quite a bit of that, so that was a very good trade. We have some other trades here that I would like to show you just here quickly. Just wanted to show you the winners and the losers group. The number one group, I'm going to kind of look at that. Wow, it is energy, coal. Wow, oil and gas. So we're seeing most of the strength in the oil and gas. But just like if you've been watching the show, I had Matador, MTDR, and I got stopped out of that bad boy today. It's up a little bit after hours, but extremely volatile. So kind of want to show you that. I got stopped out of Matador. I came in at 46.59. My stop loss was pretty tight, 43.57. I was stopped out, and then we moved back up. So I may try another. Attempt here. I only bought a half position at 44.03, as you can see on this chart. So I've just kind of been waiting. I still think that this is looking very strong. It's just volatile. We went from 100% checklist down to a 89 checklist. Which is not necessarily bad, but I'm out on this one, and it kind of shows you where I got in. They definitely, we have earnings on it, so it's swing and a miss, but I may be back in. Let's look at the only other stock that I have long right now, and that, of course, is Matson, MATX. So I just bought that one yesterday. I'd been totally in cash, and I decided I had to get something. Look at something. That's where I bought it. Right here, half a position at 95.80. We're at 96, so that is holding the pivot, and it's 93.17. So if we get just a tad more strength, I probably will be moving more into this position. It's not a great position, but Matson, it's in a good area. Transportation ship, 8 out of 197, looking pretty good. 100% checklist on this one. I should have just followed my gut instinct, and right now with the market so weak, I really need to be doing the 100% checklist ones and not the other ones. So let's kind of look at this here. The transportation ship, you can see that's in the blue. That's where Matson is, of course, and that's one of the reasons that attracted me to. We just want to avoid some of these other areas. Just the computer software. Gaming is bad. There's a lot of computer software is down. Those are potentially good shorts, but not good longs. Here's the market overview. Dow Jones down to just a tad. Let's take a look at the Dow Jones actual, and of course that's Let's look at that symbol directly, DJ. This is Dow Jones Industrial Actual. This is one I like to show for that. We're just still having those issues regarding the strength of the market. We're down below that 200-day moving average, and that just does not bode well. Unfortunately, that is an issue. We tried to rally to that line to the 200-day moving average, which is right now at about 34,899 or 34,9. We're below that, unfortunately, at 34,160. So we couldn't hold on to that. That is not a good sign because typically we want to see a bounce there. And you can see in the past that we've had a bounce, but we're moving below that 200-day line. What that means on the Dow is that below that 200-day line, which is currently right there at about 34,800 or 34,900, right in that range. Below that, we're going to see movement out of the market. So be careful. This is not a good time to initiate that many long positions. Now, I've done some probing buys, but remember, only with half positions, not full positions. Most all of my trades that I'm putting on currently are spread trades, and they typically are bear spread trades. So let's look at the next index. This really important index, of course, probably the most broad and the one I think that we like to look at the most, and that's of course the S&P 500. That is the 500 largest stocks out there, and the index. This is the one we should really look at because it tells the tale. And here is the chart for the S&P 500. We are below that 500-day line, the 200-day line at 44.33. That's where it is. That's where the line is. We're below that, 43.26. So we couldn't hold on to that line. That does not bode well either, unfortunately. Not looking as strong as we would like to see it. So right now we just kind of have a weak market all the way around. Let's look at the Nasdaq. That is where most of the big tech stocks live. And with rising interest rates, this is going to be much harder to trade than it was just a few months ago, because just a few really weeks ago, because the Nasdaq composite is where most of the growth stocks live. And so things like computer software are not going to be doing as well. Things like computer enterprise are not going to be doing as well. Tesla had fantastic earnings, and it still couldn't hold on to the $900 level. So we're going to see some weakness in tech. This is basically, it was trying to rally here. This little note that I made yesterday, but we pulled down below. So we definitely have a downward trend on the Nasdaq. And of course, when that happens, that can be a big issue. One of the big stocks, of course, in the Nasdaq is Apple. That's helped stabilize it a little bit. But with Tesla diving so much, that could be an issue. And I want to show you the Tesla chart here. This is the Tesla chart. We've almost pulled down to that very critical that very critical 200-day moving average. What I'm going to do is I'm just going to take off some of my notations here to kind of get a look at it. The level, the critical level that it fell through was this $900 level. That level basically was where there was a pivot right about $900. It unfortunately could not hold that today. It's going down. The question is now, can it hold 800? That's the key. If it can't, unfortunately, then we're probably going to go down lower. I'm switching to the weekly chart here. We could potentially move. If it can't hold 800, Tesla could easily drop very, very quickly to the $500 level. That's where the next support level is. So not a good time, unfortunately, for a lot of the techs, just not looking as strong as they were. But you don't have to worry, because we have an answer for you. And that is, if you want to get on our second chance PayPal bear call spread, I think that might be of interest to you, because this one is really, really good. This is the address. A little bit complicated because I ran out of ones that I could do on Bitly, but this is https://senfox/LP/3, the number 3, O, not 0, O, the small lowercase o, 8, and then lowercase PEZ. So if you're interested in seeing if you're interested in seeing that, it is available there. So let me kind of just go through that really quickly with you. Just going to put up the slides for that just in a second. And of course, that is the second chance bear call spread on PayPal. And I think you'll really like this one. I think you'll really like this one. And this is available, of course, if you go to this address, https senfox.com/LP/3, the lowercase o, 8, PEZ. So let's take just a gander at that really quickly. Okay, there we go. This is basically the second chance spread trade. This is the one I did enter today, and Tesla. We thought with PayPal it was gonna hold. We did do a bear spread on this one before. I closed it for a profit, but I think there's more to go on this one. I think it's going to go down even further. So I am definitely looking possibly at possibly at more pain before it gets better. Basically, what I did is I entered this trade at a net of 952. This is what I put in my pocket today, basically by selling selling some calls and then buying some calls on the February 18th expiry. And I did 7 of these. Our maximum return on this is the amount that we received as a credit, $952. We're looking at a potential return on this one over the period of 37.4%. Or if you make it an annual return, that would be a return of 539%. Pretty darn good. As long as it stays above that break even, 171.36, we will make all the profit. There's a high probability on this one, about 72% that this will work, as long as we maintain this kind of as long as the spread is maintained in sort of this front. As you can see, this slopes up quite a bit. We entered the trade today. The current price, $158.33. That's the price on PayPal. And with that, that is, even from where we started today, we've already seen a little bit of a gain on that. Let's kind of come over to that chart so you can see that the downward trend on PayPal makes this a pretty good trade. We did have, we also have some things here. This is the death cross. As you know, when a stock starts to go bad, usually you can see it. The 50-day will cross the 200-day, and then it will move down. Now, you don't want to short right when it does that, but you want to see it come down. Then you want to see it rally, and then it kind of rallied and it rallied again, and then now it's trying to rally at a lower level. That's why we shorted here, because that may give us an opportunity. So this is the monthly chart. This is the weekly chart here, and as you can see, PayPal is kind of hurting with a 17 relative strength. So hopefully we'll be able to close this one by February 18th, keeping all of the $952 that we received as a credit on this. So hopefully that will work out. So now that I've jammered and yabbered on, let's do some of the questions. Thanks everybody for holding. Apple, nice earnings today. Absolutely. Can it pull up the F? I don't think so. I wish I could say it would, but Apple is the most valuable stock right now on in the market. $3 trillion market cap, tremendous market cap. But I don't even think Apple, with its strength, can pull the market up. There's just been a lot of damage. Now, Apple itself is doing well. It's 164.95 in the after hours. So there definitely looks like there's going to be a bounce on this. But here's the thing. We're still in this downward trend. And what I'm going to do You see, I have this reversal line. So really, we can't even think about going back in until it gets above about 168. Currently, it's 165. So if this turns and moves above about 168, maybe there we could possibly look at nibbling maybe a half position. But right now, even with Apple, I would be very, very, very cautious. Let's take a quick quote from TikTok. Thank you, everybody, so much. Is a crash coming? Well, I wouldn't call it a crash. Let's just say it's going downhill right now. So I do think that we are going to see probably a 20% retracement in the stocks. That's one of the reasons why I want to put your attention to potential, potential stocks that we have where we can make money on those trades, and those are the bear trades. That one of the ones I did on PayPal. I think that one has some pretty good legs. All right, is the crash coming? I'm getting smoked, unfortunately. Here's the thing, everybody, and just take it from me. I've been through a lot of these. I've been doing this for a while, long time actually. If you're down more than 7% on any position that you hold long, of course that's owning the shares, please sell it, and then and then come back to win another day. Because if you're down more than 7%, consider selling. The market is in a downtrend. So the kind of trades that we want to be doing are the bear trades possibly, and then only the very, very best stocks that are in the very best areas right now. Oil and gas and shipping tend to be two of the best areas. But other than that, the tech stocks that we all love, you just got to be careful in this. There's the air is moving out of the tire. One of the stocks that I'm considering shorting, actually the way I short, I just buy I do these spread trades, these bear trades, is Robinhood. Hood, as you remember, that was a very exciting stock. A lot of people loved it, but it is now trading at $10.20. It had been all the way up here. And this is why, you just can't depend on what we've had on before. It's up here at $85. Now it's at $10. If this thing goes below 10, that's a critical junction. If it goes below 10, I'm going to be on the shorts. And the reason I'm going to be on that shorts, if it goes below 10, I'm going to show you this. This is in the checklist. There's a very important rating on this. And if most funds will not own a stock if it's below $10 in price. So when a stock goes below $10, there's a rush for the exit. Now, it still has a lot of funds in it, and they're going to have to head for the exit. So let's take a look at those funds and see kind of where they're at. Well, we're down a lot. There were an awful lot of funds in here, but they're not looking as good. Let's look at this. Let's look at the funds that were in Robinhood here. Just tons of these funds. See, look at all these funds. All these guys are going to have to sell if Robinhood goes below 10 and it's at 10.20. These guys are going to have to sell. So it's going to be shorting time. It's going to be a shorting time. And you see, some of these are pretty good funds. I mean, Coastal Financial, that's an A+ fund. We've got a lot of B funds in here. They're all going to have to sell. They're going to have to sell Robinhood. That's the next one on the bubble for me, anyways, is Robinhood, because I do think that, we are likely to see a lot of damage in that area. So I've been jabbering. Let's see. Next one. This is Clover Health. Thanks, Matt. Clover Health, is it a good bear spread? That's a good question. Let's look at Clover. CLOV. That's kind of what I'm doing. I'm looking for good spreads in the bear department. And that's a good way to make money. When the market's going down, we can make money as the market goes down. Let's take a look at that. This is CLOV. This is Clover Health. And as you can see, it's starting to have the good characteristics for a short. And let's look at those. One of the things that we can see here is we have the 40-day line. It's moved below that 200-day line. That's very bearish. That is what they call the death cross. And as you can see, it has been rallying to that 40-day line. So that is showing weakness. Now it can't even rally to the 40-day line. It's rallying barely to the 21-day line. So on the technicals, looking at this, we are below everything. We're below 10-day, 21-day, 50-day, 200-day. That means that air is coming out of the tire on this one. The checklist is pretty awful at 44. Let's see if we can find, and I just want to see if I can find a potential for Clover Health to see what we can do in terms of doing a short on that one. So let me see if I can put that up. What I'm doing here is I'm looking to see if I can find if I can find a short on this one. So what I'm going to do is I'm going to kind of just go through here really quickly with how we do the. This is a very kind of quick and dirty way to to do some of the to do quick calculations to see if Clover Health is worthwhile as a short. So let's see if we can figure this out. We're going to go over here to a put, probably a put spread, because we probably are a little bit bearish on this. I'm going to look at sort of some options here. Right now, let's see, with Clover Health, let's see if I can look here. With Clover Health, we're looking at, okay, let's see if I can change the view here a little bit. Hold on. Okay. And what I'm going to do is I'm going to reshare the screen just so it'll have the whole screen and not just part of the screen. So let's do it that way. There we go. Okay. So for Clover Health currently, wow, this is terrible. This is $2.28. I don't know if we can short this one, mainly because I don't know if there's enough left to short it. To be honest, let's see if there is. I don't even think we can short this one using my method here. Let's take a look. I'm going to say its expected price is 150. I'm going to look out here. Basically, I'm just going to look out I'm going to look out maybe till February. Let's see if there's anything we can do. Let's see if we can spend $100 and make that happen. I don't think I can, but let's take a look and see if there's anything good there. Well, we actually have a potential here. This one probably is the best. This is the Put Debit Spread. Let's see if this will even calculate here. Right. Well, I don't think we can. This one, boy, I tell you, this one could be, if you want to make some money. Now, here's the problem with doing this with a stock like this. It has almost no liquidity in its options. You can get into options that can say you're making money, and then you can't make any money. We could probably get if this thing falls below 230. Actually, if it stays below 205 by February 18th, we could definitely make some money on this one. But here's the thing with Clover Health, and the reason I would be a little bit more cautious. I'd be a little bit more cautious on this one. There just isn't a lot left on this one. There's just there's not enough meat on the bone. As you can see, back here, it was way up here at 21, and it's now 2. So I just don't think, even though it looks like a good short, I think it's going to be tough to do this one just because there's just nothing left on the bone. All right, let's take a look at Tesla. Tesla was, we thought they had great earnings, and they're doing well in terms of the company. The biggest issue with Tesla, of course, is the fact that we seem to be getting a repricing of assets here. And Tesla has been an absolute superstar. I want to show you the monthly chart here. This has moved up tenfold. Basically from back here in 2017 till now. I mean, boy, this is a real big move. I do believe, though, that Tesla may pull back and find support about 500. And the reason I believe that is because looking at this chart on the daily chart, that is where we have the last support. We had this 900 support. It's blown through that. It's got dead cat bouncing now. This is the 900 support. And if it can't hold the 900 support, it's going to move down to it's going to move down to the $500 support. That's where I think we're going to get support on Tesla. I'm totally out right now. First time I've been out in a while. I had all my stop losses were triggered at 980, so I'm out of it currently. Not a good time to buy it. It's a good time to wait. Let's see if it can hold the 900. If it can't, I don't think it can, then if it moves down to 500, that's where we're probably going to see some support on Tesla. All right, let's look at Teladoc. Before we go to Kira's, let's go to Teladoc. This is TDOC is a stock that we have a spread on right now. So let's look at Teladoc. Teladoc was a high flyer, but it has since kind of moved downwards. It was down $2 today. It's bounced a little bit, but it is just continuing this trend. And the trend, unfortunately, the trend is your friend. So that's why we want to be in those bear trades, because the trend on Teladoc is definitely down, as you can see. It's definitely down. So let's kind of get an idea of sort of how and where it closed. It's 67.45 in the after hours. Let's see if we can go. We have a spread trade on this, a bear spread. So I'm going to go and see if I can pull that up for everybody. And I'm just going to pull this up here. This is one that I did have on. Let's go to this. And of course, this is for TDOC. Teladoc. This was a really great one last summer. Definitely made some money on this last summer. Made money going up, and maybe I'll be lucky enough for it to make money going down. So basically, this is the slide deck that we have on Teladoc. This is we entered this trade on the 24th, just a few days ago, and when we entered it, the trade basically was right here, 67.98. That's where we entered the trade. Now, today, it closed at, let's put that up there. Let's see if we can get the right one here. I think it's, yeah, there we go. So basically, Teladoc, basically currently after hours, 67.45. So we're really basically just about here. So we move this down just slightly, and that's sort of where we're at. As you can see, as it starts to make its move, you know, we're really kind of flat on this one. But as you can see, the trend is down. There we go. We started here with this yesterday. We started here, and now we're starting to trend. We're starting to trend lower. So if we continue on this trend, we'll keep all the money, because on this one, we put in our pocket when we opened this trade $1,261. If this stays below, if this stays below the break even of 62.61 by the end of the expiry, which on this case, in this case is March 18th, we will keep the entire amount of credit that we got. So this is the trend that we need to see in this stock. So switching back to the chart, it definitely looks like indeed that is the case. So the question is, where are we going? Well, let's go to the 60-minute chart. That is pretty much of a downward trend, I would say. Yeah, absolutely. So I think it's very likely that we are likely to go lower in the near future with Teladoc, and hopefully that Teladoc trade. I think I put out there to everyone on the Teladoc trade. If we can kind of maintain in that slope, we will keep all the money. Now, I would really like to see it really move lower than 26%. I'd like to see it move down to 51. I don't know if that's likely. We may not get quite that deep a slope. We may only be able to keep half the money, But right now, we put $1,261 in our pocket for just one contract with the 70-50 bear call spread. So these spread trades are great for this kind of market where you have where you have something that's moving down. By the way, the interest rate rank on Teledoc is 194. There's only 197. So this is absolutely the basement when it comes to areas in the market. So this is a good bear trade, I believe. We'll see how it lines up. But thank you very much for that question. Thoughts on natural gas? Well, if you know, I kind of like natural gas because I do think it's one of the things that's going to respond extremely well to inflation. And we're coming into the winter, and that's typically when we get the biggest increases in the demand for natural gas, because of course it's used to heat, but it's also used in electrical production. So it's because we have so much more electrical is used in the winter to heat. The feedstock for that is natural gas. So there are some great natural gas plays. Here's one I'd like to show you, and this one has set up. I still think it's setting up very nicely. It's a company called Cheniere Energy, and what they have are two natural gas trains, one in Sabine Pass, Louisiana, and the other one in Corpus Christi, Texas. And what these natural gas trains do is they take natural gas primarily from the Permian and some other pipelines, they liquefy it, and then it's put onto LNG carriers, and it moves out to their customers. So this one, I'm very bullish on this one because of the inflation. Cheniere Energy, very much like this one. I did put my toe in the water on this one. It got snapped out because I had a very tight stop on it. I may be going back in this one again, but this is a good way to play natural gas right now. It's tough to be long on almost anything. The market is sort of just punishing everything right now. But I want to show you the some of the numbers on this one. I think it's very, very instructive. This, of course, are the fundamentals, and I normally do technical analysis, but I'm going to do a little bit of fundamental analysis here. And what that is showing you how I think and why I think this one is good. You'll notice that the sales on this have moved up 14% last quarter, 25%. This is the increases in sales, 119% increases in sales. We don't have the profit numbers yet, but we're coming, I think, in 25 days, we will have earnings on Cheniere, and it's currently in this consolidation pattern. And this one, I do believe, is buyable. It's buyable. Looking at the technicals, we are literally above all of the moving averages, the 200-day. So that means big money is coming in, 50-day, 21-day, and 10-day. So basically, this is a rising stock. Even though it pulled back today, just slightly, 10 cents, this is a rising stock, and it is definitely stuff is moving in here. We are 3% below the pivot in 11 days. So my guess is we came up, we tested, we pulled back, and now we're having another test on the buy point. The buy point for this one, and I'm going to set an alert for this because I think this is a very good potential buy point, and the buy point I'm going to is right at 113.40. So 113.40 is where I'm going to set the set the alert on this one. I do think that this is, if it can cross above this buy point, this one might be of interest in the natural gas area. Now, there is another company. It's primarily a pipeline company, but they do benefit from they do benefit a lot from natural gas. It's Williams Company, WBM. I think that's the one. I have to see I can't remember the symbol on that one, but I'm going to pull this up and I want to show you this one as well. what I'm doing is I couldn't remember the stock symbol right offhand, but it's WMB. Well, that's an easy one. So WMB is the stock symbol for Williams. And I kind of wanted to show you this one. This is also ready, I think, is viable right now, even in this market. I think that this one is potentially viable as well. It's called Williams, and basically they are basically big in the transportation of natural gas. They also do storage, processing, gathering. They kind of do it all in the natural gas area. This one is oil and gas integrated, 6 out of 197. That's very strong. But Williams is really, if you're looking for the natural gas play, I think you couldn't do much better than Williams. 93 relative strength here. On the technicals, we're above every moving average, 206. We're above all the moving averages. That's looking good. We have a 100% checklist on this one for Williams Company. So if you're looking to kind of put a little bit of skin in the game here, I wouldn't recommend any more than about a half a position, but this is what I would look at. Williams Company's symbol WMB. It's oil and gas, and it's on the New York Stock Exchange. This is going to do well if we have a lot of inflation, because electrical is in this country, the primary way we generate electrical is by burning natural gas, and a company like Williams collects this. And so I do think that the price of natural gas has moved up significantly. As a matter of fact, let's take a look at the spot price of natural gas and see if there's anything there kind of giving us an idea. Nat gas spot price. And typically, natural gas natural gas is very it is very cyclical in that it moves up. But let's see if we can see if I can get a good number for you. Yes, there we go. Here we go. This comes actually from the government, so that our tax dollars do something, I guess. I'm not totally sure what they do, but it does look like we are seeing a trend. Now, it has pulled back as of late, but we are seeing a upward trend in natural gas. So that indeed is interesting. And I do think we're going to see one higher. This is the monthly price. Let's go to the daily price to see kind of how oh boy, look at that spike. This is the daily price. Unfortunately, I'd like to get a little bit better. Let's go to the weekly price here. Yeah. Okay. There's the weekly. So we definitely have an upward trend market in natural gas. So that is definitely something that we want to look at in terms of that. So very, very interesting on that. All right. Okay. This is another question from Antonio. Thank you very much. Is now a good time to start buying? I would say no, not a good time to start buying. What we need to do is we need to wait for a follow-through day. That's the key. That's the key thing. It's not a good time to buy now. Wait for a follow-through day. Now, what do I mean by this follow-through day? Well, what the follow-through day is it's something that was invented by William O'Neill, and it's a measure of how the market is reacting. What we need for a follow-through day is we need 4 days in a row of 2 or more major indexes moving up. So what I'm going to do here is kind of give you a sort of a look-see at the follow-through day. Let's see if we can get this up here. Okay, let's see. That's the IBD. Okay, so let's see if this will let us see this. Well, it's not actually letting us see us. let's take a look. I'm going through a number of posts that hopefully will give us a nice PDF of the follow through day. All right. So basically, and I'm going to push this up. This is, of course, this is for educational purpose. This is for educational purposes only. If you'll notice, we need to have in a follow through day. We need to have 4 up days in a row, and then on major indexes, and that connotes the beginning of a follow through day. Now, what's going to happen more than likely is we are going to see, right now we were working on a follow through day yesterday, but that failed. So what we really need to do, if you want to, right now is a good time to stay in cash and wait for the signal. The best way to get that signal, of course, is I put this out to everybody in the Action Trade Alerts. And what you need to do is you need to get on the Action Trade Alerts list at www.dallastradingfloor.com, and I will indicate when the fall through day happens. You can do this yourself, but I put out an email whenever the market condition changes. I put out an email to everyone. So this is an easy way to do it. Whenever I get the inkling that it's changed, and this is from a number of sources, I will put out the email. So you need to be on the list for that in order to get that. Okay, so let's see if we could take any more. Tesla below 200. Yeah. Tesla is looking weak, and it may be weaker yet. So we've got to be careful. Encourage your realist. Okay. By the way, if everybody looking on TikTok, if you could share the live, that would be great. By the way, if you want to see all the charts and everything that I am putting up there, super easy to do. Just go to my profile and click on the link for my profile. It says Beacons, and then scroll on down and you'll be able to see the live show as it is coming live. All right, let's look at, very good. Thank you. Convoy to Ottawa. It's happening right now. Is it going to make any difference in the market? I don't know. But boy, I tell you what, everybody in Canada, don't let them steal your money. Don't let them steal your money. They're going to do some stuff on the real estate thing that I think is just criminal. I'm down here in Dallas, but boy, do not let them steal your money, because, they're looking to make it, they're looking to have a capital gains tax that is going to just rip you off. And I don't like normally to get involved in politics, but boy, you need to get your voices heard in Ottawa. They're just out of control. They need to know that they should have hands off the equity in your houses. Anyways, just really quickly saying that. All right, let's look at Goldman Sachs and JP Morgan. Let's look at Goldman Sachs first. This is the GS, I do believe, could possibly, and I don't know, I don't have any inside information on this. By the way, I have no inside information. I just want to repeat that. This is what I think that these guys could be looking to buy something like Robinhood. That would make sense. I don't know if they're going to do it or not, but anyways, let's look at Goldman Sachs and see. Well, like many of these excellent stocks, this is below that 200-day line, so it's retreating. It has a relative strength of 51. Not a good look here. The checklist 33, not a good look. Technically, this is terrible. So here's the thing with Goldman Sachs. I've got to, I hate to be the negative Nelly here, but I think you just got to avoid it. I think you have to avoid Goldman Sachs. It's just not the right time. It's pulling back, and it's below the 200-day line. Also, I want to point this out too. We have a potential of a death cross here with the 50-day crossing the 200-day. It looks like that's just going to happen shortly. So we don't want to probably be in Goldman Sachs. So Goldman doesn't look like, where we want to be. So the other one, of course, in the financials is JP Morgan Chase. So let's look at JPM, and, don't listen to Jamie Dimon on anything, because he's always feathering his nest. He's kind of like Kramer. You got to be careful with him. He speaks with a forked tongue. I think that's what, I can't remember what famous Indian chief said that, but Jamie Dimon speaks with that forked tongue. He's just trying to get his bonus, which I'm sure could pay off is more money than you can absolutely imagine. He's trying to get that stock price up, but it also very similar thing with J.P. Morgan and Goldman. It's below the 200-day line, and it looks like the 50-day is crossing below the 200. That is a death cross. Relative strength on this one is worse than Goldman Sachs at 48. So basically half the market is doing better than this one. Let's look at the technicals. They don't look good either. And the checklist is 33. This is just not good. Any way you slice it, this one just doesn't work. So, you got to avoid this one. It's tough because, what can you buy? I've just been saying, I've just been going down the list and saying no, no, no. But that's why I am so concentrated on those bear trades, because I think we're going to get we're in a correction mode. We could easily get a 20% correction. And of course, if you do the bear trades, you're going to benefit on that. You're going to benefit on that. All right. This is a question from Joan. Thank you from Juan. Sorry. Thank you, Juan, for your question so much. Let's look at the Russell 2000. Of course, let's get that index up here. That's the Russell 2000. Let's see Russell 2000, because there's also a Russell 1000 index. But let's look at that 2000. Boy, did it ever. Look at that. It is, again, just like an individual stock, you can look at indexes like this. Whenever that 50-day falls below that 200-day, that's not showing a good look. That means it's going to go lower. It is let's looking at the technicals here, it's just not looking good on anything. So I kind of want to look at the climate here. Let's see. Well, yeah, just not looking good for the Russell. Just not looking good for the Russell. We're at 2000. We could be much lower than this. Let's look at the monthly chart. As you can see, it's tested here. Wow, that's 900. If we went down 20% from here, currently we're at about, we're at 1976. So if we went down 20% here, that's all the way down here to about 1600. That could easily happen. Yeah, that could easily happen. So, we might have a situation where the Russell could be trading at 1700. That would not be good. So it looks like it's in a downward trend. Let's look at the weekly to see. Yeah, it's lost support, and it's lost support at the 200-day. That's the key level, and unfortunately, it's moving lower. There's a little bit of uptick in the relative strength line, but basically that is going lower. So right now is a good time for shorts, and it's a good time to be in cash. PayPal is up 2% after hours. Well, that is true. We do have that bear call spread on PayPal, and it definitely did move up after hours. I think, though, this is more of a dead cat bounce, and I hope that I'm right on this one, but I think this is more of a dead cat bounce than anything else. And it seems like it is getting a little bit of strength here. We'll see. But it's trading well below the 10-day line. Now, one thing that when we do have these pullbacks like this, some of the biggest updates come when we're in downward trends. So it does look like we're going to get a little bit of a bounce here. It was up today 1%, and it looks like it's up 2%. So the question is, can it hold on to that level? And it very well may be able to do that. But I think it's unmistakably in a downward trend. We'll see. We'll see if that makes sense or not. I hope it does, because I have a little bit of money on that. All right. Thank you very much. BKKT is affected by actually I think you mean affected, not affected, just not to be in grammar police here. But when you affect something, that means you take on airs, and when you effect, that means it has a cause and effect. All right, so let's look at BKKT. BKKT. All righty, that is BAKKT Holdings. It provides software. Ooh, this one is looking bad. This is not a chart that you want to be in After hours, it's 350. This kind of looks like a bad one. I don't think I would want to be in this one. Technicals on this, it's below everything. Bad checklist, terrible area. Boy, I tell you, if you're in this one, please, 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 just for your sanity, I know that you're not going to like to hear this, but I think if you're in this one and you're down more than 7%, which I suspect you are, if you're in this, I'm not trying to cast any dispersions. Just believe me, I had to learn this, and this was so hard. This was so hard to do. But I think that it's not time to be catching falling knives. And if you're down more than 7% on this one, just think about selling it, because the money can be placed in a better trade, and you can make more money. This is not a good stock, and it's not a place you want to be. It's not a place you want to be in the market right now. Excuse me. All right, let's take a quick more questions on from TikTok. Thank you. Palantir and SoFi. Let's take a look at Palantir. That has had that Palantir. I was in it. I had to give up on it because it blew through some of my stops. But it's down to $12. It has incredibly good. Institutional support, so it's very interesting. But this group has been weak. Software Enterprise is 180 and 197, so there's definitely people that are moving out of this one. Is this a good short? Well, it's got a relative strength of 10. I don't know. You could probably get surprised on this one. This is a very well run company, so I'm not sure about this one. But it's a 56. It's a 56 on the checklist. I just think you got to avoid it. I think you got to avoid this one right now. And if you're down more than 7%, consider selling it. It's just this is one that I don't think you want to be in it. And really, this is the key. Never let a stock move against you more than about 7% from your buy price, because making up the difference can be awful hard. So that's kind of my take on it. Also, let's look at SoFi, SOFI, and this is in an interesting space along with Upstart. But SoFi is also very, very challenged. It has a relative strength of 17, which is not kind of where you want to be. Its earnings are in 33 days. I just don't think you can buy this one. No, this just doesn't look good. We have the death cross going on here. Not a good look. So we don't really want to be in this one, I don't think, either. So I'm just giving you all these things. Okay, Tesla is going to 500. I think you're right, Tony. Tony Wong basically says, and I think this is a good comment because he's backing this up with charts. Tesla's going to 500. I think that's true. But if it goes to 500, maybe there's some opportunities. I'm out right now. But the reason for Tony's comment, I believe, and this is shrewd, Tony. This is a good chart rating from what I can see. He's basing it on this secondary buy point here. As you can see, that's right at 500. It's blown through this buy point here. That's at 900. Oops. And now we're back down to let's go back to Tesla. I blew through those charts, but basically what Tony is talking about here is on the weekly chart, if you look at it, the primary pivot, why did it do that, is at 900. And is at 900, and then we have another pivot, but it's down here at 500. And for some reason, it wanted to show me that Packard chart, but I want to see the Tesla chart. So, anyways, very good point, Tony. I think it is going to 500 if it cannot hold on to 900. I think that's basically true. It's basically true. Lucid to teens. I think you could be around that one too, Tony. I think you could be too on that one. Let's look. Oh, that is nasty. Oh, that's nasty. Yeah, it came all the way down. It touched 30. Can we see it in the teens? Yeah, I can see it in the teens because the flat base, I could actually see it at $10 a share. I can see it at $10 a share. That's kind of what it's looking at, Tony. I think you're right. $10 the teens. Yeah, I can see it. I can see it. This is a good short, by the way. And I'm gonna try to put together some stuff on it too. So I'm gonna put this on my shorting list. This is sort of my bear hunt. That's what I'm doing in that now. It's a bear hunt. LULCID Lucid Tech, and that's sort of in my bear hunt thing there. So see if we can get something. Good entry point for Nvidia. This is from Antonio. I actually have a short on Nvidia right now. NVDA is, let's look at it. Let's go over here to the daily. We're getting some support at the 200-day line. And it did bounce a little bit after hours, so we might be moving back up here. It's an awful good stock, but it has fallen a lot. 221. So let's see if we can find something that will allow us to possibly let's see if I can get the chart for this. Sheet and slides. There we go. I use this every day and I can't remember it. It just shows you on one track mind I got. Okay, so we want to look for Nvidia. This is the trade. This is the bear put spread that I have on Nvidia that I kind of wanted to show you here. Currently, this is the chart for Nvidia, and so what I'm going to do here is, and I just updated that. I don't think it's fallen anymore, but let's take a look, kind of to see what. And you don't want to be entering this long, by the way. This is really what I'm trying to say here. You don't want to be long on this one. You want to be short on this one, and this bear put spread does that. If you've been listening to me. That's what the bear put spread does, and at 221, we're right there. So we're in this downward trend. We're in this downward trend on Nvidia. We did pop up a little bit, but I don't think you want to enter this one. I think you want to let it go lower. And what I did on this one is basically yesterday on the 26th, I entered this trade, and kind of giving you an idea. Now I did come out of my pocket on this one, $402. On this one. So this is a bear put spread, but I liked the way this was working. Maximum return on this about 148. And the break even, as long as it doesn't move above 216, I should be okay. About a 44% probability on this one. And that is if it goes straight. But we could potentially earn $598 and for a risk of 402. I like those odds, especially when the stock is in a downward trend as this one is right now. So going back to that, let's kind of put that up. Kind of gives you a look-see of how I entered the trade. It was $402 out of my pocket by buying the March 18th 218.75 put. I know that's weird, but that's what my calculations were. And then simultaneously selling that March 18th 213.75 put. There's a spread of 5 in there for a total out-of-pocket expense of $402. If this thing remains below 216.74 at the end of the trade, at the expiry, March 18th, I'll put 595 more bucks in my pocket. So I hope that happens. But not a good time to be entering Nvidia long. Just not a good time for that. All right. Well, I didn't get to everybody and everything, but I thank you so much right now. Right now, Rana, I don't think we should really be buying much of anything. I do have one stock long right now, and it's Matson. It's the only one I have. But right now we're let's see if I think we're going to be in a correction for a while. So what I'm looking to do is bear trades primarily using options. And this is the only stock that I have, and even it pulled back. Matson Lines, it's up a little bit after hours, $3. This one probably will do well. If you have to put your foot in the water, like I do, because I don't like being out of the market. I don't like being all in cash in here. This is one you might want to consider. This is in the ship transportation area. This is going to benefit from inflation, and it's got a 97 relative strength, and it's got a 100% checklist. So if you need to buy something, I don't recommend buying a lot. This is one you might want to consider. Matson Lines, MATX, and it is right in the buy zone right now, and it is in one of the few groups in this declining market that's doing well. Yeah, it's doing well. Okay, and I talk a little bit about Hood. Hood earnings were bad. Puts are doing great. Yes, they are. Go for it, Drunk Squidward. You're doing great. Keep on, keep it on. I think you have the right idea with I think you have the right idea there with Hood. I just think it's a disaster and a train wreck. And having puts, are you going to do very, very well? I do the put spreads only because I like to limit my risk in case there's in case there is a blow off top. But I think you're going to do great with those. Well, everybody, thanks again for watching the show. So appreciate everybody out there watching, and I enjoy doing the show an awful lot. Here's the thing I want to ask as a favor. Hopefully, everybody, if you could just like the show, if you could just hit that like button, smash it. If you could smash that like button, I would appreciate it. I know everyone tells you to do that, but it really does help. Okay, well, everybody, this is going to be on the YouTube in a second after I click off here. If you're watching on TikTok, do consider going to www. Dallas Trading Floor and signing up for the trade alerts or some of the other great things. We do have a watch list on there right now that is really good as well, and it's easy to get. So just if you're so inclined and you're not already on the list, www.dallastradingfloor.com. So till tomorrow, everybody, happy trading.